Today, we're taking a reasoned and analytical look at whether XRP could reach $3.50 by the end of 2025. This isn't investment advice, but rather a deep dive into the current data, technicals, and fundamentals shaping XRP's future. We'll explore both the bullish and bearish scenarios, examine the key catalysts, and break down what might drive XRP higher or hold it back. By the end, you'll have a clearer understanding of the probabilities and what to watch for if you're following XRP's price journey. Start with the arguments in favor of XRP reaching $3.50 or even higher. Some analysts and crypto blogs are quite optimistic. They suggest that if major catalysts align, like ETF flows, regulatory clarity, and institutional adoption, XRP could push well beyond $3.50, with some even forecasting $5 or more by the end of 2025. These bullish scenarios are based on the idea that a combination of positive news and strong market momentum could create the perfect environment for a significant price rally. Diving deeper, one source suggests XRP could hit around $5.05 in 2025 if conditions are especially favorable. Another analyst sees a realistic target of $3.50 to $4.20 in the short term, possibly within just 3 to 6 months if momentum builds. There are even more bullish voices claiming that, with the right macroeconomic tailwinds and perhaps some quantitative easing, XRP could reach as high as $10. While these numbers are exciting, they depend on several factors coming together at once. From a technical analysis perspective, XRP has shown resilience by holding key support zones, particularly around $2.40 to $2.60. If the price can break above resistance levels, specifically the $2.70 to $2.75 range, a move toward $3 and beyond becomes much more plausible. Technical traders are closely watching these levels, as a breakout could signal the start of a new upward trend, especially if accompanied by strong trading volume. Another key factor is adoption. If more banks and financial institutions begin using the XRP layer for real-world transactions, and if on-chain activity picks up, this could provide the fuel needed for a breakout. Institutional adoption is often seen as a major driver for crypto assets, as it brings both credibility and significant capital into the ecosystem. Watching for new partnerships and increased transaction volumes can offer early clues about potential upward move. Broader macroeconomic and regulatory environment also plays a crucial role. There's speculation that favorable regulatory changes, such as ETF approvals or clearer rules in major markets like the US, could act as a catalyst for XRP and other crypto assets. If these changes coincide with positive macro trends, such as increased liquidity or supportive monetary policy, the chances of XRP reaching $3.50 become much stronger. A perfect storm of positive factors comes together: regulatory clarity, institutional adoption, and strong macro tailwinds. XRP could surge past conservative forecasts. This scenario is what many bulls are hoping for, as it would create the ideal environment for a rapid price increase. However, it's important to remember that all these elements need to align, which is a tall order in the unpredictable world of crypto. The flip side, there are several arguments against XRP reaching $3.50 by the end of 2025. Most baseline forecasts from reputable sources are much more conservative. For instance, some sites project XRP in the $2.20 to $2.80 range by the end of 2025, while others see around $2.20 as a likely outcome under moderate growth scenarios. These projections suggest that $3.50 is above the consensus mid-case. Digging into the numbers, one site projects XRP in the $2.20 to $2.80 range by the end of 2025, while another expects around $2.20 if growth remains moderate. These forecasts are based on historical trends, current adoption rates, and the assumption that no major catalysts will dramatically shift the landscape. For many analysts, these numbers represent a more realistic outcome, especially if the broader crypto market remains steady but unspectacular. Reach $3.50, several favorable conditions must align. These include a clear and positive regulatory outcome, such as ETF approval or favorable rules, a breakout above technical resistance levels, and strong macro or crypto liquidity tailwinds. If even one of these factors fails to materialize, the rally could stall, keeping XRP below the stretch target set by the most optimistic forecast. Downside risks remain significant for XRP. If the broader crypto market weakens due to macroeconomic factors, rising interest rates, or regulatory setbacks, XRP could remain stagnant or even decline from current levels. Technical resistance clusters around $3 and above could also act as barriers, preventing the price from reaching higher targets. Some algorithmic models only see modest upside for XRP in 2025, reinforcing the need for caution. Technical resistance is a major hurdle. If XRP fails to break above the $3 mark, it could remain trapped below this level for an extended period. Resistance clusters often act as psychological barriers for traders, and repeated failures to break through can lead to decreased momentum and even sell-offs. This is why technical analysis is so closely watched in the crypto space. Algorithmic models, which use historical data and complex calculations, predict only modest gains for XRP in 2025. These models take into account a wide range of variables, including market sentiment, trading volume, and macroeconomic indicators. While they're not always perfect, they do provide a data-driven perspective that often tempers the more optimistic forecasts seen in the crypto community. Taking all the arguments into account, a balanced, probabilistic view emerges. The chance of XRP hitting $3.50 by the end of 2025 is estimated at around 20 to 30%. This means it's possible but not highly likely. The more probable scenario is that XRP ends 2025 somewhere in the $2.50 to $3 range, assuming decent market conditions and some favorable catalyst. If conditions are weak, XRP could remain in the $2 to $2.50 range or even lower. Let's break down the key price ranges to watch. If XRP manages to break out above $2.70 to $3 with strong volume, this would be a significant technical signal that the path to $3.50 is active. On the other hand, if the price remains below these levels, it suggests that the market isn't ready for a major move just yet. These price zones will be critical for traders and investors to monitor over the coming months. Regulatory developments are another major factor. Any news around ETF approvals or the regulatory classification of XRP in major jurisdictions like the US or EU could have a significant impact on price. Positive regulatory news tends to boost investor confidence and attract new capital, while negative or unclear developments can have the opposite effect. Staying informed about regulatory trends is essential for anyone tracking XRP. Institutional flows and adoption are closely watched by market participants. If large banks or payment firms announce new partnerships or begin using the XRP ledger for significant transactions, this could drive both price and sentiment higher. Institutional involvement often signals a level of trust and long-term commitment that retail investors look for when deciding where to allocate their capital. Overall health of the crypto market is another important variable. A strong market tailwind with rising prices across the board can lift XRP along with other assets. Conversely, if the broader market is weak or facing headwinds from macroeconomic factors, even positive news specific to XRP might not be enough to push it to $3.50. Market context always matters. Liquidity and on-chain metrics are also worth watching. Higher transaction volumes, more active wallets, and increased promoter or investor interest can all signal growing momentum. These metrics often precede price moves as they reflect real-world usage and demand for the asset. Keeping an eye on these indicators can provide early warning signs of a potential breakout or reversal. Trading volume is a particularly important signal. A breakout above key resistance levels with high volume suggests strong conviction among buyers and can mark the beginning of a sustained rally. Low-volume breakouts, on the other hand, are more likely to fail and result in a quick reversal. Volume analysis is a staple of technical trading strategies for this reason. ETF approvals are a potential game changer for XRP and the broader crypto market. If regulators greenlight an XRP ETF, it could open the door to significant institutional investment and mainstream adoption. This would likely boost both liquidity and price, as ETFs make it easier for traditional investors to gain exposure to crypto assets without directly holding them. Regulatory classification of XRP in major jurisdictions remains a hot topic. If XRP is officially recognized as a non-security or receives a favorable legal status, it could remove a major overhang and unlock new opportunities for growth. Conversely, negative or ambiguous rulings could limit adoption and keep prices subdued. Legal clarity is a key catalyst for the next phase of XRP's journey. Announcements of new institutional partnerships can have an outsized impact on XRP's price and perception. When major banks or payment firms publicly commit to using the XRP ledger, it signals confidence in the technology and its potential for real-world use. These partnerships often precede periods of increased trading activity and can serve as a catalyst for price appreciation. Market sentiment across the crypto space can influence XRP's trajectory. Bullish sentiment driven by positive news or rising prices in other major coins often spills over into assets like XRP. Conversely, bearish sentiment can drag down even fundamentally strong projects. Monitoring sentiment indicators and news cycles can help anticipate short-term price moves. On-chain activity, such as the number of active wallets and transaction volumes, provides a window into real-world usage. An uptick in these metrics often signals growing adoption and can precede price rallies. Conversely, declining on-chain activity may indicate waning interest or stagnation, which can weigh on price performance. Liquidity trends are another important consideration. High liquidity makes it easier for large trades to occur without impacting price, which is attractive to institutional investors. Low liquidity, on the other hand, can lead to increased volatility and sharp price swings. Tracking liquidity metrics can help gauge the market's readiness for a major move. Macro tailwinds, such as supportive monetary policy or a general risk-on environment, can provide a boost to crypto assets like XRP. When investors are optimistic about the economy and willing to take on more risk, capital often flows into alternative assets. Monitoring macroeconomic indicators can help anticipate periods of increased demand for crypto. Interest rates have a direct impact on risk assets. Rising rates tend to make traditional investments more attractive, pulling capital away from crypto. Conversely, lower rates can drive investors toward higher-risk, higher-reward opportunities like XRP. Keeping an eye on central bank policies and interest rate trends is essential for understanding the broader investment landscape. Crypto markets often move in liquidity cycles. Periods of high liquidity, driven by new capital inflows or bullish sentiment, can lead to rapid price increases. Conversely, liquidity dry-ups can result in sharp corrections. Understanding where we are in the current cycle can help set realistic expectations for XRP's price trajectory. Market psychology plays a significant role in crypto price movements. Fear and greed can drive prices far beyond what fundamentals would suggest. Understanding the emotional drivers behind market moves can help investors avoid common pitfalls and make more rational decisions. Looking at historical patterns, XRP has experienced several major rallies and corrections over the years. While past performance doesn't guarantee future results, studying these cycles can provide valuable context for what might happen next. Patterns often repeat, especially in markets driven by sentiment and speculation. Algorithmic forecasting uses data and statistical models to predict future price movements. While these models can't account for every variable, they provide a structured approach to analyzing risk and reward. For XRP, most algorithmic forecasts point to moderate gains, reinforcing the idea that $3.50 is possible but not the most likely outcome. Consensus estimates from analysts and forecasting sites provide a useful benchmark. Most place XRP's likely 2025 price between $2.20 and $2.80, with $3.50 seen as an optimistic stretch target. These estimates reflect a blend of technical, fundamental, and macroeconomic analysis, offering a balanced view of what's possible. Risk management is crucial in volatile markets like crypto. Setting realistic expectations, diversifying holdings, and using stop-loss strategies can help protect against downside risk. While the potential for high returns is attractive, it's important to balance optimism with caution and to avoid overexposure to any single asset. Staying informed about upcoming catalysts is essential for anyone tracking XRP. This includes regulatory announcements, major partnership news, and macroeconomic developments. Being proactive and responsive to new information can help investors make timely decisions and capitalize on emerging trends. Technical analysis tools such as moving averages, RSI, and support resistance levels are widely used to identify potential entry and exit points. For XRP, key levels to watch include the $270.300 resistance zone and the $240.260 support area. These tools can help traders navigate volatile markets and make more informed decisions. Fundamental analysis looks at the underlying value drivers for XRP, such as adoption rates, transaction volumes, and technological developments. Strong fundamentals can provide a foundation for long-term growth, even if short-term price movements are volatile. Keeping an eye on these indicators can help separate hype from substance. Sentiment analysis uses data from social media, news, and other sources to gauge the mood of the market. Positive sentiment can drive prices higher, while negative sentiment can lead to sell-offs. Tools that track sentiment can provide early warnings of potential trend changes and help investors stay ahead of the curve. Staying up to date with the latest news is vital in the fast-moving world of crypto. Regulatory updates, partnership announcements, and macroeconomic developments can all move the market quickly. Setting up alerts and following trusted sources can help ensure you never miss an important update. The XRP community is active and engaged, often driving awareness and adoption through grassroots efforts. Community sentiment and activity can sometimes precede major price moves, as collective enthusiasm translates into real-world action. Engaging with the community can provide valuable insights and early signals. Taking a long-term perspective can help smooth out the volatility inherent in crypto markets. While short-term price swings can be dramatic, focusing on the bigger picture, such as adoption trends and technological progress, can provide a more stable foundation for decision-making. Patience is often rewarded in markets driven by innovation. Scenario planning involves mapping out different possible futures based on key variables. For XRP, this means considering best case, base case, and worst case outcomes. By preparing for multiple scenarios, investors can make more resilient plans and respond effectively to changing conditions. Sum up, the probability of XRP reaching $3.50 by the end of 2025 is estimated at 20–30%. The more likely outcome is a price between $2.50 and $3, assuming decent market conditions. If conditions are weak, a range of $2 to $2.50 or lower is possible. These probabilities reflect a balanced view of the risks and opportunities ahead. If you're holding XRP and aiming for $3.50, keep an eye on key technical breakouts, regulatory developments, institutional adoption, macro market health, and on-chain metrics. These factors will likely determine whether XRP can achieve its stretch targets or remain within more conservative ranges. Staying informed and adaptable is the best way to navigate the evolving crypto landscape. In conclusion, XRP's journey to $3.50 by the end of 2025 is possible, but it will require a combination of favorable technical, regulatory, and macroeconomic factors. While the odds aren't overwhelming, the potential for upside remains if key catalysts align. As always, approach the market with a balanced perspective, stay informed, and be prepared for both opportunities and challenges ahead.